Welcome to The Explainer. Today, we're cracking open a technical stock report to show you exactly how Wall Street gives a company its financial checkup.
So how do they do it? When a stock is all over the news, how do analysts figure out what's really going on under the hood? Well, as it turns out, it's a lot like a doctor's visit.
Yeah, they don't just guess. Analysts run a whole battery of technical tests. They check a stock's vitals, its momentum, and even its mood to come up with a diagnosis. And today, we're going to walk you through that exact process.
So, who's our patient for today's checkup? It's a company called Plug Power, ticker symbol PLUG. As a major player in the alternative energy space, its stock has been on an absolute wild ride. So, let's get it on the examination table and see what's what.
Here's our first observation, the main symptom, if you will. The stock's last recorded price was $2.53. This is our starting point. The reason this patient is even here for a checkup in the first place.
But look, a price is just a number, right? On its own, it doesn't tell you the whole story. Is this a sign of strength, of weakness, or something else entirely? To figure that out, we've got to start running some tests.
First things first, let's take a quick peek at the patient's chart. Plug Power is famous, or maybe infamous, for its volatility. I mean, in just the last few months, it swung wildly between a low of $1.41 and a high of $4.58. This context is crucial. We know we're not dealing with some slow and steady patient here.
All right, the checkup officially begins now. And just like with any doctor's visit, first up we check the vitals. This is the basic stuff, but it's absolutely essential for any diagnosis.
And the very first vital sign we check is its temperature, so to speak. We do this by asking a pretty simple question. How does its current price compare to its own average price over the last few days and weeks? Is it running hot, or is it running a little cold?
And the results are in. It's pretty consistent across the board. The current price of $2.53 is below all of its recent averages, the 5-day, the 10-day, and the 20-day. In diagnostic terms, the patient's temperature is definitely running cold. This is a classic bearish signal, suggesting some recent weakness.
Okay, next up, we run the momentum test. The price might be low, but does the stock have the energy to recover, or is it just losing steam? Think of this like checking the patient's pulse and their strength.
Our first momentum tool is the MACD indicator. Now, a simple way to think of it is like a race between two runners, a fast one and a slow one. Right now, the faster runner is actually falling behind the slower one, and that is a classic sign of downward or bearish momentum. This next number really confirms that diagnosis. It comes from a test called the Arun oscillator, and a deeply negative score like -64.29, well, that indicates a strong, established downtrend. This isn't just a minor blip. The trend has been heading south for a while.
But hang on, here's our first conflicting signal. This is the Relative Strength Index, or RSI. It measures if a stock is being bought or sold too aggressively. A reading below 30 is oversold, but Plug Power is at 42.47, right in the neutral zone. So, despite the weak momentum, it looks like there isn't a panic sell-off happening.
So, the vitals are weak and the momentum is down, but it's not in critical condition. Let's move on and gauge its personality, or its mood. Is the stock stable, or is it anxious and unpredictable? To do this, we use a tool called Bollinger Bands. Imagine them as the emotional range of our patient. They create a channel, a ceiling, and a floor that tells us what its expected highs and lows are, all based on recent volatility.
And here's that channel all mapped out. The ceiling is up at 363, and the floor is down at 217. Now notice where our patient at 253 is currently located. It's well below the midpoint and a whole lot closer to the floor than the ceiling.
This positioning confirms that the sentiment is bearish. The stock is operating in the lower, more pessimistic half of its expected range, and that just reinforces the diagnosis we've been seeing so far.
Okay, we've checked the vitals, we've tested the momentum, and we've gauged the mood. It's time to gather all the test results and put together our final diagnosis.
And this is where it all comes together. On one side, we've got a pile of bearish signs. The price is below its short-term averages, and those key momentum indicators are negative. But on the other side, we have that neutral RSI, and the report highlights another key factor, a very favorable risk-to-reward ratio of 9.56, which suggests the potential upside might actually outweigh the downside.
So how do you score all of that? The report synthesizes all these data points into one single technical score. And Plug Power's score is 54.71 out of 100. It's almost perfectly neutral, reflecting that tug-of-war between the bearish signals and those few signs of potential.
So what's the final prescription? Well, the report concludes that this balanced view makes the stock suitable for swing trades. This means it's probably not a long-term buy-and-hold kind of situation right now. Instead, it's for traders who can capitalize on its volatility, all those short-term ups and downs.
And this leaves us with a question every trader has to answer. When you see a diagnosis like this, a patient with weak vitals but signs of some real underlying resilience, do you see unacceptable risk or do you see a hidden opportunity? And that, right there, is what makes analyzing the market so endlessly fascinating.